sustained bounce that a lot of people expect following the COVID, coming out of COVID restrictions earlier this year. So looking a bit dead cattish. So they're going to keep on the easy side of things from now on. Over in Japan, and Ueda was waffling at the G7 over the weekend, saying that banks need to weigh the effect of past hikes. Kept the mantra that the BOJ are going to continue easing. But we did get a bit of data out, PPI data from Japan. And as you can see there, coming in, still a high number, 5.8%, but lower than expected and the prior month at 7.4%. So a bit of softening there on the price front for PPI for April. We do get CPI on Friday. Again, we'll look at that in more detail. Kishida and his economic council, made up of government bods and advisors and whatnot, had a meeting on Monday to debate the role the government and the BOJ should play in sustainably raising wages. And they want the BOJ to, or the players, to eliminate the risk of the return to deflation. The Cabinet Office told the meeting that they must ensure the recent positive signs on an end to deflation are sustainable. Some of the councils, alongside private experts, urged the BOJ to end QE when inflation stabilises around 2%. We are sailing above 3% currently. Some participants said the BOJ should consider modifying extraordinary stimulus if inflation and wages keep rising. So a little bit of pressure from the government side of things, the cabinet, in terms of what the Bank of Japan should do if prices remain elevated. What we're going to have to see is further evidence of that, such as like the CPI data we get on Friday. Over to the Riksbank, again, over the weekend or late last week, Riksbank's Jensen said, I could have considered a bigger rate hike in April. He's also one moaning about the level of the currency, but that they're pretty powerless to do anything about it. Over to the Bank of England, and BOE's Peel says inflation remains undesirably high. We expect to see a sharp drop in inflation. We're also seeing evidence that we are moving in a more favourable direction for the inflation outlook. There may be more work to do to bring down inflation, so a nod towards hikes. Actually, something that Bailey mentioned last week, that he didn't exactly agree with what Peel said in the press about, he uttered a line a week or so ago about how the UK citizens should get ready to feel poorer and deal with being poorer as a result of inflation. Didn't exactly word it correctly, and Bailey gave a little bit of a ticking off at last week's presser about that, but nothing like those comments this time around. The UK is going to begin trade talks with Switzerland to boost services. That's kicking off this week, so look for some headlines coming from that one. Over on the data front this morning, Germany wholesale prices going into the negative both year on year and on the month as well. As you can see there, down 0.5% versus minus 0.7% expected. So not as steep a drop as expected, but as we've been mentioning, starting to see more and more year-on-year numbers coming in the negative, showing that all the price pressures, or a lot of the price pressures we saw last year, are washing out. These smaller numbers, PPIs, wholesale prices, etc., will feed through into inflation at some point. The EU chucked out a load of revised forecasts, and they hiked up 2023 inflation to 5.8% from 5.6 prior, and 2024 to 2.8 from 2.5% prior, both of which still well above the ECB's target. They also upped growth marginally, 2023 1.1% from 0.9 prior, and 2024 1.6 from 1.5 prior. in those previous forecasts. So a little bit more bullish on the economies are the EU for now. We'll see what the data does with that lot. Coming over to the US and just knocking back to the data we got on Friday, not a lot. Michigan was the main number and some real mixed numbers there. Sentiment souring a bit, 57.7 versus 63 expected and 63.5 prior. Current conditions also taking a knock on the head, as did expectations. So not looking good on that survey there. However, inflation expectations came in only a pip low at 4.5% on the 1 year. So showing a bit of stickiness, but on the longer term, they rose 2 pips to 3.2%. So an uptick there. So a little bit of mix there. Some consumers not finding things all that great at the moment, or less great than they were, but inflation's still very sticky. Now, it has to be said, this Michigan survey is a telephone survey of some 500 people. So as we mentioned last week, it's not often a big data point, but coming as it did Friday with really nothing else in the pipe of any great importance, the market had a little bit of a move around. Just before that, we got some import-export price pressures or price numbers there. Again, the year-on-year numbers in the negative, more than last year, down 5.9%. Import prices down 4.8%. So you're seeing the trend here now with some of these year-on-year numbers, as we've been explaining. Over to the Fed, and Fed's Goolsbee said the inflation rate is still too high, but at least it's coming down. The jobs part of the mandate is going well, but inflation isn't. Over to the Bank of Canada, and they released their senior officers loan survey thingy last week, and they see the tightest business lending conditions in Canada for 3 years, or since 2020. So that tightening financial conditions evident there in Canada as well. Over to the old biddy, President Biden said that he's going to re-nominate Fed's Cook for the full 14-year governor term. Also announced the picks of Philip Jefferson to replace Brainard as vice chair, and also Adriana Kugler gets a seat on the board as well, which has been touted a few weeks ago. I couldn't work out, I couldn't find anything about whether this Adriana Kugler is a hawk or a dove. I don't know if Kay, you've dug into that at all and found anything to do with that?
No, I haven't put Google search to work yet on that one.
Yeah, I had a little look this morning. I couldn't see much, so we'll have to wait and see on that front. And while the jobs are looking hot at central banks, Rhys Mendes has been appointed as Deputy Governor to the Bank of Canada. So another one on the board there, replacing Rogers, who's gone to the Bank of England on the F.A.C.E, the financial side of things. On the debt ceiling talks, there were some positive comments out over the weekend. Yellen said that Republicans and Democrats are making progress in the talks, according to the Wall Street Journal. Brainard, who's moved over there now to the government, says the budget deal talks were constructive. Biden confirmed that there will be debt meeting talks on Tuesday, and he's optimistic for those talks. So maybe we get some sort of can kick tomorrow. China, you'll remember, said they were going to send some representatives to the Ukraine. That's going to happen May 16th and 17th, according to a Ukrainian government official talking to good old Reuters. And headline I put in our chat room a story that apparently the reason for the S&P's gain in 2023 is all down to an AI frenzy, according to SocGen. So everyone wants on the AI bandwagon, and that's keeping stocks supportive. That's the headlines I've dug out. Kay, you got anything else I've missed or you want to highlight?
Yeah, well, I mean, a bit on the side. There's been a lot of talks about this arms thing between South Africa and Russia. Now it seems that there's been a bit of a scrambling back on the harshest comments, and South Africans don't expect the Americans to put sanctions on them, but of course there's still an investigation ongoing. Anyway, the market took it as a bit positive, sending the rand about a good percent and a half stronger than a percent and a half actually stronger than the Friday close. So that is one to keep an eye on. And on the data front, this morning we had also the European industrial production out, and that was pretty negative. That was quite deep into the red. It's in line with what we saw out of Germany and France last week, but they both weren't that much in the red, if I recall well. So even the pan-European number is pretty bleak right now, and that adds to the fact that the data in Europe seem to now have turned the corner, and I think that's still keeping the euro in check versus other currencies right now. And that's about it. I mean, for the rest, it's been a relatively quiet weekend and a quiet start to the week. It'll all boot off tomorrow and Wednesday.
Yeah, definitely. I mean, that IP, we have to remember that it's March data, you know, and we already had the things like the PMIs for April, which, you know, didn't really change the picture. Again, watching that divergence, aren't we, between manufacturing and services. So as I say, we do get the new manufacturing data of the month kicking off today with the Empire State. There we are expecting another drop, minus 3.75 versus 10.8 previously. This one's been a bit all over the shop, the New York Fed of late, up and down and up and down.
Yeah.
Then that follows on Thursday with the Philly Fed, the second number from that one. But we have plenty of other data as well. Tomorrow we get the German zoo data. So we get to see if, you know, how investors are looking at things over in Germany, probably glass half empty at the moment, if I know those guys. US retail sales tomorrow as well as industrial production. And we start to get some of the housing market data filtering through as well. On Wednesday, not an awful lot more housing data from the US starts and permits. We do get a bit of PPI data from New Zealand, Japan GDP as well, coming overnight. On Thursday, jobs report from Australia is worth watching. More housing data, and as mentioned, the Philly Fed. Over on Friday, probably a big day, Japan CPI. Expectations are that CPI goes higher once again. So that one's going to need to be watched for, obviously, for Bank of Japan expectations. Not that you'd know it, that they're on an easy path given what the rate's doing right now in the yen, which is getting sold quite significantly around the grounds. So I think we'll start with a look at that. I think we've got Powell on Friday as well. I saw someone mention Powell's talking on Friday. I can't remember what at, but we'll dig that up later in the week as far as the speakers go. You don't know what Powell's speaking about, do you, mate?
No idea, mate. No, I don't know. Yeah, I see Schnabel, Powell, Lagarde, so they must be at a bit of a powwow, perhaps.
Oh, maybe it's still this G7 Euro group or whatever crap going on.
There's more stuff going around. While you take a look around, I'll see if I can find out what he's talking about.
Yeah, no worries, mate. Thank you very much. So dollar yen looking bright and breezy again. We're just knocking up against some old minor support and resistance around the 136.30. Going a bit gangbusters again this morning, and say it's really yen pairs all over, looking very bid everywhere. So there was some talk that corporate flows were behind the bid in dollar yen this morning or overnight through Asia. Whether that's the case or not, I'm not sure, but it looks like we're reacting once again to yields in general. As you can see there across the board, yields all looking in the green pretty much. So it's another yield story, and perhaps I think maybe this optimism around the debt stuff coming in, adding a bit to that as well, to the positivity. So a bit of risk on we're seeing in that. But the pressure's been on, particularly coming into through Friday. You know, we saw a bit of a dip in a lot of pairs. Euro dollar down under 109, down into my old 108.30 70 zone. Pretty much got to the middle of that. Can't get out of it for now. So this needs to keep close eye, and if we get through that zone, then maybe we're looking at something worse, maybe a further dip down, you know, maybe a look at the big 107 level. Plenty of levels in the way before then, but certainly it's going to make this rejection up here at 111 even more significant. So from here, it's going to be a case of watching risk. If we do get anything tomorrow from the debt ceiling talks, we'll have to gauge, is it a short-term can kick or is it a longer-term can kick? There will be a big difference in trading that. The market might have a little bit of a relief rally on a kick to September, something like that, but it really is only a short-term relief rally. It doesn't change the problem. The market will only settle down if we get a big pump a year or 2 years down the line, like we've done previous times. So until that happens, the market's gonna keep this on its radar. Aussie dollar, looking at that one, got under this zone. I was expecting support coming in at the 20s last week, around 40, 20, and then down to the big figure. Give or take a couple of pips, it's held the 40. We've seen a bounce back up. It's got through my zone, and it's just starting to find a bit of support there as well now at 66.80. Next target or next level to overcome will be 66.90, 67. So nothing breaking out of any major ranges as far as the Aussie goes, and that's pretty much the same for a lot of pairs we're looking at. We've all seen these levels time and time again, not going anywhere differently. Cable had a little move down. There's the old magic 124.50, and it got a few pips underneath it, but it's held, give or take, and we've seen a bounce. So now it's going to be looking at its respective big figure, a bit like the Aussie. So not looking like any trends are breaking at the moment. As we can see there, it's holding these higher lows just about. But all the hard work's going to have to be done on the upside once again to get back up here. So a bit of walking around is the main theme that I'm seeing today, particularly in markets. There are a few pairs hovering around key levels. Euro sterling had that little break under 87, got down, didn't quite get down to 86.50s. Again, middle of a little zone I've got down here. We've had a bounce, can't seem to get and hold above 87, 87.20, which was this old level coming down. So that's going to be key for this one moving forward. While it holds below there, it keeps the downside in play, and maybe we get something a bit worse. Let's bring that out a bit.
Labour report tomorrow?
The which what?
Labour report tomorrow in the UK. That's
yes, there we go. Yeah.
Decide on those levels. I was saying that this morning in the chat room, and while you are on the sterling side of things, that could decide perhaps a little bit on this zone, euro sterling, and on the cable, the 124.40.50 perhaps. I think yeah, for the rest today, I'm not sure. Well, it's gonna be the dollar if that what is it, New York Empire does something, but it doesn't look like the market really wants to take anything on right now.
No, exactly. It was Simon has chucked in about Powell.
Yeah, fun. Yeah.
Yeah.
It's a conversation with Bernanke that he's having on Friday at research conference, but it only starts at like 4 p.m. our time, 11 a.m. New York time. So by then we are going to be naked and not even bothering to listen to it.
Yeah, I'll probably be on a plane coming back from Amsterdam, so all yours. You can let me know what happened.
Thank you so much.
One pair that has made a bit of a break at last is our old mate Dollar China. That's had a little break up finally through this 95.60s, 96.50s as well, but it hasn't held the break. Got into 97s, hasn't held it. But what it has held is the price support areas, or around this fib, and down to this break point 95. So while it stays above there, we could get a move up maybe towards the 7 area. I'm looking at this little area here around 98, 50, 60 as the next possible resistance point before we have a crack at 7s. So I've had the slicer and dicer out on that break up. Finally got my 96.50s and didn't get anything in the 97s, but I'm pushing up to see if we get something close to 7. And I may look at either taking a separate short or getting out my longs and having a little short on the first test of that 7 handle, should we get up there. So overall this week, I'm going to be off from Wednesday, so I'm not looking to dip into too much, just manage what I've got, but I'll keep the sniper rifle out for the next couple of days, as always. But really, I'm not seeing anything to inspire me that says pairs here or there are going to move significantly. Obviously, keep an eye on the Turkish lira while we've got this election stuff going on, because it may have a pull on some of the other currencies. If there's a big move there, maybe some input into risk as well. If Erdogan loses and it's a change of government, that might be seen as a bit of positive for risk. But I really don't know what to make of that one. It's going to go either way. Either he retains the leadership and we're back in the same old boat, and then probably Turkey's going to rock it again, or there's a change of guard and we see that coming down, and I say, bit of a move into risk, so that one to keep an eye on. You got any thoughts this week, mate? Any inputs you're highlighting?
Yeah, I can have a quick look around if you want. Hello? Yeah, okay.
Yeah, got it.
Okay, yeah, sure. Start with that dollar yen quickly. Still in the relative short term, right? That we are trading, and yes, we do have volatility, but what we have to note though is persistent lower lows, higher lows in this dollar yen. Perhaps not too much, but I know people are watching this, and as Ryan already said, a bit of activity there. Could have been like investors' activity as well, where the trust banks have stuff to do in the yen. But really, we have to wait how the CPI turns out. There's GDP as well in the middle of the week, but that's rarely been like a big market mover. Of course, famous last words on Wednesday, it's going to be a big mover. But anyway, we're trying to make a bit of a channel here. We had this spike above, but I'd say that 136, 60, 70 is still going to have a bit of a say in this. And then this is your range really for now, I'd say, anywhere down to 133, but then already 133.60, 133.80 was holding last week. So that's already a very good marker. And I reckon with the way that the market tries to trade it positively, there may be some more to go, especially if we have some positive news on that ceiling, and also saying that the government saying that they have to keep an eye on wages. We know what the wages will do start of this fiscal year, so we should have an impact on wages going forward when the data will come and will show us. But then I still have this idea about very close cooperation between the Bank of Japan and the government, which has been repeated once more overnight. And that is also seemingly keeping the market a bit on its toes, saying that Ueda maybe indeed, as I've been saying many times, indeed like a slow reformer instead of like the big reformer. Anyway, we were trying to make a head and shoulders here in the euro yen. We did break through the neckline, but now we are retesting it, and actually we are trading slightly, just slightly above. It's around 140. The retest is about 147.90, but we are already well above the level where it ideally would have been should have been capping around here. It's 147.15. We're well above, so this may go into the bin very soon. Next levels here: 148.50, 60, and then 149.30. On any more positivity, I reckon the market will have a bit of a thought there. This may be somewhere around when that CPI or the GDP may come out. We need to get back below 147.15, really, if you look at those lows here, and yeah, around here. We need to get back below this 147.15, I think, to get going back to the downside. We're seeing pretty much the same thing on the euro sterling. It's a bit steeper because of the volatility of the sterling as well. So it's steeper than the euro yen, but we can't ignore that some of those levels have been holding really rock solid. And now we are trying to build a base here in the 167.90. Okay, 168 to 168.5. There seems to be really the level where the market is getting interested in what's happening in sterling yen. And then on the day, we are not too far from testing this. And whoops, if that would materialize, that would sort of create a bullish flag as well. So keep an eye on what's going on around 170.5. It looks pretty well bit because both dollar yen and the cable as well, having held, looking pretty good. So that really pushes sterling yen up, and possibly having like this double trend line activity here around 170.5 could be an interesting watch for sterling yen traders. And we are seeing pretty much similar things on all the yen pairs, right? We had like a break of this trend line, but then hold here, and now we are bouncing in the Aussie yen, and we're going to have the similar area again to watch around 91.50, 60. So that's your level to the top side. We really need to get back below this zone here to crack lower again. But again, with what's coming up on in Japan, it could be enough of a driver to send it back down if CPI really comes out a lot stronger than expected. Kiwi yen is a lot less clear to me. What else? The dollar cat. Maybe not that one. Yeah, the dollar cat here is trying to make up its mind around 135.15. That's a bit of a shorter term level here. We're still in this broad, call it a very shallow or slowly moving triangle, but it's trying to form something inside as well. Yeah, I was looking at this one, 135.80 to 136, the figure. That is going to be a zone that I marked on my post-its. Have a look at what's happening here. Oils are trying to make up their minds. WTI is turning around $70 right now. Gas is doing a bit better as well. So yeah, it may be a case of trying to form a top or at least an intermediate top around 135.85 figure if seen on the dollar cat. And if we get a move and a close back below 135.15, then we may have a look to look-see to what's happening at a bit lower levels. Eurocat, as I was saying, like this 146.15.45 is the zone. Lot of traffic in this zone over time. It held again, and now trying to build a base there again. But then we have to see what's happening on the euro as such. If the data start to weaken on the euro, perhaps this could do a retest and maybe even try a bit lower. But it's anyway an interesting zone. Top side 148 still there, still seeing a lot of interest there. Every time we get to visit there, and then above there 148.70 right now. What else? Aussie dollar. It's firmly, whoops. It's firmly in that range here, 68, yeah, 68, 15, 20, 65, 65 to 65, 3/4 on the other side. And we are now trying to range a bit here between 66.40 and 67.05. That could be your inside range for the day. Especially with a lack of big data coming out. Let me have a quick look at the Aussie calendar, because there is something going on in the Aussie this week.
Jobs.
What day?
Wednesday, I think. Thursday.
All right. So we may, I mean, of course, there's going to be US data in between, but for the time being, this may settle down a bit. Risk doing better should prevent it from falling out of bed. That's the theory. So let's see what happens. On the other side, if the Chinese yuan weakens a lot, then we know that Aussie usually is a bit weaker. But for the time being, I view this as a bit of an inside range right now. Yeah, thanks, Joao. But I don't know if the RBA minutes are going to do a lot, because we've heard already a lot about the RBA members and low, and then we saw already the chart back, and I don't know if it's really going to be a big mover, but yeah, good reminder. Kiwi got a bit of a knock on the head there, as we were talking, as I was saying about the inflation data coming off rather sharply and putting us back inside the RBNZ target range. So that was the interesting piece of information for the Kiwi on at the end of the week. I'd say watch out what's going on. Again, this 61.90 figure, but then I'd extend it a little bit. 61.70 is going to be your first decent support if this would give way. And now we're turning around a bit of a neutral zone. I'd say keep an eye on what's happening. 62, 50, 60. If it starts to creep back above and then above 65 as a confirmation, we could go back higher. But I think that'll have to come from a weaker dollar instead of a weaker Kiwi. If it's only for the Kiwi, I'd say we are going to find resistance up there already, I reckon, in that 62.5, 62, 65 zone. I reckon there's going to be already a little bit of resistance on the back of those data. That for those, not really done anything than respecting the channel in the end on the Euro-Noki, but it's a steep one, right? So on any move in oil and gas, this channel could break now, but then we have to still respect what happened last week, especially those tops, which were the bottoms here around 11.47, 46, 47, 46, 48, 11.46, 48. That's probably going to be your confirmation to really break it. But in the meantime, respect that zone, even if we get a little bit out of the channel. If the channel in turn is respected, then I think this could go hand in hand with dollar Noki and retesting higher. On the dollar Noki, your zone to break is 1070 to 1074.5. We're in a 0.5% here, where it either caps and we start to come back down to test the 1040s, or we can go a little bit higher. Ryan already covered the China. I don't see much changing on the MEX, so I'm gonna let that one be today. Yeah, then the rand. You know, there's been a lot to do about those arms sending to Russia. Really, Ramaphosa repeated that South Africa wants to stay out of conflict between big blocs, and that they did not give the approval to send those arms. So that sent dollar rand in two waves back down to 19. But on the 11th here is when that stuff came out. And in the meantime, it's starting to try to hold 19 on the dollar rand. That's going to be your first level of George for strength or weakness. But it's undeniable that we have broken this 1870, 1882 zone, and I would say this trend line is going to be relatively important for whatever I have left long. I think, regardless of this situation, of course, the fastest speculators had to get out of their positions, but I'm going to continue to hold mine for as long as this trend line holds here. I think that's going to be important enough to hold it up, because there's other stuff going on in South Africa. It's not only those arms sales, but there's a lot of issues with Eskom, the copper gangs and stuff going around. It's not a great situation for the moment in South Africa. So I'm going to try to defend the position. I have been trading it around, so my average is pretty cool. I started to buy it here, let some go, bought some back. So it's going to be a painless trade, whatever happens. But of course, I'd love it to perhaps more gradually, because that's easier to defend the position. Start to creep higher again, perhaps towards those levels of 1975, and why not 20, the big figure. But let's see what the short-term speculators have to do with it right now. I wouldn't completely rule out move back below 19 and a retest of 1880. I think that's enough for the start of the week. What do you think, Ryan?
Yeah, there's only a couple other bits I was going to look at.
Go for it. Oh, hang on. I need to show a last one. You know, Stel and I are trading at relatively similar timings now as well. So I bought a couple of them in the silver again, just to start to reload what I've sold up here on the ads that I did, just to start to reload them. I'm going to be very patient, because I really wouldn't rule out at least a decent retest of this big broken channel. And we have to be a bit careful as well with the debt ceiling, because it could have a double effect, right? The first effect, it could be that yields are going to rise again, because that means if they reach a solid agreement, yields should start to rise again, because that means that the Treasury can issue a lot more bonds again to fund deficits and payments and stuff instead of being stuck. So I reckon there's going to be a bit of a knee-jerk effect on yields, which should put a bit of negative should have a bit of negative impact on the metals. But this one in silver, being an industrial metal, I would say it may have less of an impact here and actually stabilize earlier than what gold would do on a break up in yields. Well, breaking up, I don't know if we're going to break up, but they should be underpinned anyway. If in turn it's like a plaster on a broken leg and they only go into September, then I think there may be the inverse effect. You know, I know not everybody agrees with that, but yields having that little pop and then start to come off again, perhaps. And I would be careful with risk markets as well. If it's only a very temporary can kick, like until after the holidays. But anyway, this is how the picture looks, and I'm still going to be patient enough with my sales here to reload the full amount will not be before 21, or if we start to break back above 25s. Gold is just 2000, right? 2000 is where we held the last time. A bit more in the 1990s, a bit more support around here. That's coming in at 1990 as well. So if ever there's a bit of an accident or yield starting to fly again, watch out what's happening at 1919 gold, because that could be your accelerator for a move down to why not mid-19s. So be a bit careful what's happening there. For as long as this level holds, I think it's still quite positive. And that's it for me, Ryan. Over to you, my friend.
Thank you, mate. You stole the one I was going to talk about, which was gold. No worries. This is one I'm looking at as a potential trade for the debt ceiling stuff. Though it hasn't seemed to have reacted as much to the optimism that we've had from that so far. So like Kay's saying,
screen, mate.
Do you not see my screen?
No.
Oh, what's going on there again? Sharing it. Let's try that again. Stop sharing. Share screen. Turn the screen. Yeah. Got it? Hello, hello. You're on mute, mate.
Yeah. Shall I take it back and then you talk about what you want to talk about?
Yeah, it can do. Is it not? I don't know what's going on with the bloody screen.
No,
share again.
No. It says that you are trying to share the screen, but it does not show your screen.
Yeah.
All right. Yeah. What time frame do you want?
No, that's fine. That's fine. As I was saying, it is looking still positive based on that. I thought we might have had a bit more reaction on the optimism from the debt stuff over the weekend, but it hasn't. I'm still looking at that one potentially to get in some shorts. I was looking at I was looking to see if we got to move up to that highs, the 2070s up that area, those prior highs up there, but we never got a shout in on that one. So I will be still looking from the short side anyway if we got up there, depending on the driver. But yeah, if we do get a debt resolution, this might be one I'll jump into pretty quickly. That was really all I wanted to
okay.
In the end.
Yeah, it's fine, mate. I think it's all right, yeah, for a Monday.
Yeah, I think that's good. So keep an eye on the data, as we said. Lots, or enough to come out this week to keep us entertained. I think the main thing you've got to look at is that the market, we've come through all these central banks and currencies have fallen after pretty much every one. So we are, I think, well into a time where we're not going to be pricing hikes anymore. I think the hike cycle is coming to an end, and the market's smelling that, and so we're now going to play the how long they can stay up for versus when they're going to have to start cutting them, and that's the game we're going to be playing for a lot of currencies. So keep an eye on those crosses, because they're going to be important between the smaller banks, and then obviously what everyone plays off against the Fed as well. So that's the bias, I think, moving forward from now: holds and cuts rather than holds and hikes. And we see if we get any data that keeps the things changing. Did you want to have a look at oil?
I can. I think WTI is a bit how shall I say, a bit confusing right now. I think the market is trying stuff, but not really going anywhere. 73, 73 and a half, 70, whoops, 73 and a half, 74, I think, on the WTI. As long as we are below there, it looks to be still negatively oriented. But on the picture, right? I mean, we don't really know exactly what people want to do with it, but it does seem like OPEC has impact on stuff for a couple of days, and then it wanes. That's really what we can take away from this. In my opinion, there's not much more to take away from it. But if you look at it a little bit like the Brent that I was looking at, the overall move and mood is still relatively negative. If you look at that, we really to break out, you need to go above 74 for a starter, and then the big zone, if it would come very quickly, is not before 79, right? So it really needs to get going. It really needs to break out of here. See a lot of demand. See China, the China revival. See there's a lot of conditions to fulfill to really see this higher. In turn, on the downside, since we had those SPR levels coming off to really very, very scarce reserves, I'd say that somewhere in the low 60s, 64 down to 62, if you look at those levels here, we should still see support. I think we're more like trying to build a range going forward, but for that, this 62, 64 zone needs to hold. And
yeah, the White House was saying they're going to start rebuilding the SPR again in June, I think. June or July, June. So everyone's going to have their bids out in front, no doubt. But this week being manufacturing week in the US is going to be one you can watch through oil, because if it's suffering there, then obviously that's going to see the bit further downside, I think, in the bias remaining bearish on that one. Anyway, that's it for a Monday. So hope we get you up and running for the week ahead. Good luck with your trading this week. I hope you make bundles of pips. Thanks to Kay. Still should be back tomorrow, so we'll get his view on things. Have a great week, everybody. We shall see you tomorrow.